welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of June 29, 2015. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was certainly not kind to Delaware mortgage rates. Take a look at the bond chart on the screen. You can see mortgage bonds the previous week tried to make a rally and move higher with that blue arrow up, but last week on news that they've reached a possible deal with Greece on a bailout, mortgage bonds sold off, stock market rallied. That moved Delaware mortgage rates back to the highs of 2015. Now, moving into the weekend, Greece did not, they kind of backed out of the deal. Doesn't look like there's going to be a deal on Greece. That's going to be bad news. So with the mortgage bond hitting support and stopping there on Friday, and with no deal on Greece going into Monday, we're going to recommend cautiously floating your Delaware mortgage rate to start the week. But if mortgage bonds continue to sell off because of some news from Greece or whatever, we would quickly switch to a locking stance. But with us hitting a floor of support and the deal for Greece seems to have fallen apart, we're going to recommend floating your mortgage rate to start the week. Now, long term, if you take a look at the bond chart on the screen there, you can see that long-term trend for the bond has been for the bond to sell off. We've been on this stair step down. If you look at the blue arrows, mortgage bonds have been making lower lows, lower highs, and they keep stepping down each week or so to a lower low, moving interest rates to the high and higher and higher. So we're on this stair step down. We need some big news to get off that stair step. The Greece deal falling apart, and if they default and leave the European Union, that could be enough impetus to make the stock market sell off and move the mortgage bonds higher. But if not, we're still going to be on this stair step moving down, so we would quickly switch to a locking stance. Now, in economic news, big report last week, gross domestic product or GDP, the final reading for the first quarter came in at negative 2%, which is the fifth time we've had a negative GDP in the 6 years since the recovery. So the negative GDP is being blamed on a negative trade balance due to a much stronger dollar, harsh winter weather, and the closing of the West Coast port. So with that in mind, we're going to see if the GDP gets any better in the second quarter, but a negative GDP is not good for the economy. You need a GDP closer to 3% to have a robust, improving economy, so we'll have to keep an eye on for that. Then we saw the Federal Reserve had their meeting. In their meeting, they basically stated that they're not going to raise the short-term interest rates for June. The next meeting, September, they hinted they possibly will raise the short-term interest rates in September, so we'll have to keep an eye out for that. If they do raise short-term interest rates, it could cause the stock market to sell off, so it may actually hurt the bond market, which is long-term interest rates. So it may be a good thing short-term for interest rates if they raise the Fed funds rate. They also lowered their projection for the economy. They were projecting a growth in the GDP between 2.3 and 2.7. They dropped that to 1.8 to 2%. So they definitely recognize the economy is slowing. Then we had, in the housing news, we had new home sales for May 2015 hit their highest level in 7 years as sales rose by 2.2% in May from April to an annualized rate of 546,000 new homes sold. That's nearly 20% higher than May 2014. Then we had the CFPB issued a statement that it's going to delay the implementation of the TRID, which is the TILA-RESPA Integrated Disclosure Act, replaces the GFE and replaces the HUD. That was supposed to go into effect August 1st. That's being pushed back to October 3rd, and it's not to give lenders in the real estate more time. They actually screwed up, and they were required to send Congress a notice within 60 days, and they missed that date, so they had to push it back. So they ended up pushing it back further than they needed to. And then USDA Rural Housing announced that effective with new commitments October 1st, 2015, they are increasing the guarantee fee. It's currently at 2%. It will go to 2.75% effective October 1st. So on a $200,000 purchase price, that's going to take the guarantee fee from $4,000 to $5,500. So you're going to see a difference there. So some reasons if you're going to go USDA to get under contract and close before October 1st. Now, USDA is underwriting turn time as of Friday the 26th. They were working on files from the 18th, so they have increased their turn time, so please plan accordingly. You should be getting 45-day contracts at a minimum on your USDA loans. And then in the local news, the next first-time homebuyer seminar is Saturday, July 18th in Newark, Delaware at Chestnut Hill Rd from 10 a.m. to noon. You can register for that event by giving us a call, 302-703-0727, or online, www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.